Trading week here in Asia and in Europe. Let's discuss some of the trading themes with Dariusz Kowalczyk, or Derek Kowalczyk, I should say, Chief Investment Strategist at CFC Seymour. He joins us now from our Hong Kong bureau. Derek, as we tend to see the markets beginning to focus more and more on economic data from the U.S. and wondering how long and how severe this downturn could be, are the issues of the financial system and the concerns there pretty much behind us, do you think?
It seems that investors are behaving as if they were, but I'm very concerned that we have just seen one wave of the write-downs and the major problems with the financial sector, and that another wave is coming because it seems that declines in U.S. housing prices will continue later this year, and this obviously has negative impact on the values of mortgages, mortgage-backed securities. So I'm afraid that there will be another wave of write-downs in the summer, and they will not come only from mortgage-backed securities, but also from other kinds of securitized debt, such as credit card loans and auto loans. So I'm afraid that more trouble is to come and that the market is not fully discounting that negative scenario.
Yeah, and Dariusz, good morning to you. Very interested to see your work you've done on valuations, the P ratios going forward. Now, you say they've rebounded from the March lows, but let's face it, if the earnings aren't going to come in where we hope for, and that is the real danger, then those Ps look even richer.
That's very true. We have seen quite a substantial recovery in terms of price-earnings ratios. For example, here in Asia, in forward-looking terms, they are now at 16 on average, up from 13 in mid-March. So quite a substantial rebound. However, if indeed we are going to see further major write-downs, then countries where the banking sector accounts for a large proportion of market cap will have to suffer further. Now, Asia is not as exposed to the potential for write-downs in the US in a direct manner. However, regional exporters will definitely suffer if the US or European consumers are weighed by the fact that their assets, such as real estate and stocks, will fall further, as I expect they will during the second half of this year.
Okay, then, Derek, what is the best thing for investors to do right now, then?
I believe that there are only a few markets in Asia which look attractive right now based on measures such as valuations or dividend yields. And I like Indonesia and Philippines, albeit obviously they are very small markets. I also think that China, which kind of stalled its recovery last week due to the earthquake, has a further leg upside ahead of us pretty shortly, because the government will definitely try to boost the market ahead of the Beijing Olympics. As far as the rest of the region is concerned, I think that the recovery since March has been too sharp and has pretty much priced in all the favorable news. So I think that I wouldn't definitely be increasing my allocations in the other markets in Asia, and for that matter, anywhere in the world right now.
Dariusz, very nice to see you again today. Thank you very much indeed for joining us on Capital Connection. Dariusz Kowalczyk, the Chief Investment Strategist at CFC Seymour. Just ahead, we're going to talk